Happy July 1st, everyone. Our top story today, stock futures rising on the first trading day of the second half of the year, the first trading day of the third quarter of this year, and across Wall Street. Of course, analysts are discussing the investment themes for the next 6 months. We have our own 3 themes that we're watching for you today, starting with big tech here, and an undeniable thread has been the excitement around AI, led by NVIDIA, pushing the S&P 500 up 14% and the NASDAQ Composite up 18% in the first half of the year. Here in studio with more, we've got Yahoo Finance's Josh Schafer. Hey, Josh.
Hey guys, yes, I picked tech as sort of the one thing I'm watching going into the second half of the year, really specifically kind of the fundamental story of tech and the earnings, right? Because yes, we've talked ad nauseum about this big tech rally and how it's been all big tech, right? You look at the S&P 500 this year, more than 2/3 of the gains coming from essentially the 6 companies we always talk about. I'm taking Tesla out of that Mag 7 group, and you're talking about companies like NVIDIA, Apple, Amazon, Meta, et cetera. And really, it's been driven by earnings growth, though. And so to me, the largest story I'm watching, and a lot of strategists that I've talked to are watching going into the second half of the year, is just, does big tech continue to outperform in earnings? Because that is a reason that they have driven the rally. It's also a reason the S&P 500 came out of an earnings slump, right? We were in an earnings recession, and essentially big tech by itself carried it out. You look at Q2 earnings coming up to kick us off to start the second half of the year. Revisions, we highlighted this in our morning newsletter this morning as our chart of the day. You can see there, this is a chart from UBS. The top 6 tech plus, which is again those companies I was just naming, are what is keeping revisions from falling for the second quarter. So still right now, you're looking at a largely just big tech exceptionalism story. Do the others actually catch up? Do we get some earnings growth from the other sectors and the other companies? I think is maybe the largest looming fundamental story for the market rally.
Absolutely. It's a yes and, right? We need not only the AI rally to keep this market up, but we also need to see perhaps a little bit of a broadening. Another stat to join your slew of stats there, Josh, that I saw this morning. The top 10 companies are having a 35% growth on market cap and only a 23% growth in earnings. And at what point does that start to be a concern, that the earnings maybe aren't justifying the market caps for some of these big companies? Another thing, guys, that I'm looking at for the second half of this year here is inflation and, of course, the rate cut cycle to come that investors are pricing in now. 2 cuts, that is despite the Federal Reserve and policy and Fed speak indicating only 1 cut to come for this year. I think about what we heard from Stuart Kaiser last week when he was on our show, just the idea that you have to really be looking at the jobs market. And that is because we are starting to see jobless claims creeping higher just ever so slightly here. What does that mean moving forward? Do we start to get a feeling of increasing volatility underneath the surface of some of the data that we're seeing that indicates a potential for that soft landing to become a hard one? Or I was talking to Rick Newman this morning, and he was saying inflation is at a place where if you just don't touch it, if you don't look and close your eyes, in a year we'll be at that 2 handle that the Federal Reserve is looking for. So that's what I'm going to be looking at for this year, both the jobs data in particular to indicate where the economy is heading, and also, of course, those rate cuts to come for the Fed.
Well, look no further to this week than for more of that jobs data. Of course, you're going to get that ADP private payrolls Wednesday, and then, of course, we're going to be looking out to this Friday for that jobs report, the employment situation from the BLS, everybody's favorite statisticians out there. And anyway, one of the other major things that I'm keeping tabs on, and that we all are in the second half of the year, we're watching the U.S. election here, and particularly after that first debate. Now, without kind of going into and kind of reprising exactly what we heard during the first debate, because there are potentially going to be more debates in the future, we will see there. I'm thinking back to what UBS is putting in their election watch right now and the scenarios that they're seeing playing out. And they did say that the election is likely to trigger market volatility. They think investors should manage risks accordingly, of course, here. But here's particularly what it could imply. In equities, the U.S. consumer discretionary and renewable sectors could be vulnerable in the scenario of a Republican sweep of both the House and Congress, White House and Congress. And then at the same time, they think financials would stand to benefit in that scenario. Now, you think about some of the other scenarios that they're continuing to look at and where they're kind of looking at some of the hedges potentially going forward in their own investment portfolio thesis. One of the huge things that they continue to kind of lean on right now, they think investors should hedge risks in sensitive stocks and sectors, and they think that gold can act as an effective hedge against fears of geopolitical polarization, inflation, or excessive deficits too.
I mean, the election, Brad, obviously is one thing that it seems like a known at this point.
Yeah.
But the volatility that we just haven't had at all this year, I think, is kind of the key, right? If we're splitting this into first half, second half, the VIX basically went nowhere for 6 months. So if it goes somewhere in the second half of the year, you would think at some point maybe we're going to get a little bit of volatility that will impact the market there. Maddie, going back to the inflation story a little bit, it's interesting to me. Doesn't it feel like we came back to where we started the year, where everyone or most people are just kind of comfortable now? You were referencing like, just don't look at it and maybe it will just go down. I feel like we went through that hard 3 months and now we're entering the second half of the year back with, well, inflation is just coming down. It will just be, I don't know how fast it's going to come down, but it's just going to come down. And I think if that isn't the case, that's sort of an interesting risk to the rally.
And seeing the transition, too, from guests who used to really dig into which exact moment the Fed was going to choose to cut, those same people now coming on our show and saying it doesn't really matter if it's September or December. That is a huge shift in the commentary from these same people.
Well, just the fact that they're speaking specifically about September or December, there's nothing that they're talking about with November, and the election plays a role in that as well, with a Fed that wants to seem or come off as apolitical as possible here. Historically, that has been the case. Of course, this is a different environment, as they all are, for the Fed to navigate through here.